My computer should come soon though, within a week or two.
Alright. Alright, so Max, only a quick question. The people that's in this group so far, right? Ramir. Alright, so Max, only a quick question, right?
Yeah.
So far, we have market structure, so, right? Market structure is just being able to tell what phase the market in. If it's in a downtrend, if it's in an uptrend, or if it's in consolidation, simply by identifying the highs and the lows. Or they have this down, right?
Yeah.
Okay. And then you have you understand support and resistance and how to draw it and how others draw it. Yeah, you have that down. Or you can type it in the chat, you know, because I just want to make sure y'all been practicing how to do this, or how to identify this before we move on, because you're gonna need to know, you need to have these skills done in order for us to move on to the next confluence, right?
I already see great improvement.
Okay. And now we have trend lines, right? And this trend line could be trend line bounce break. Resistance bounce. Right? Y'all able to draw the trend line correctly, how others draw it, so that you could quicker identify when and where the market is about to reverse or continue, right? Okay. Let's see. All right, so that's just 3 so far, right? Now you just do a quick recap, and then after we will move on to the next tool you'll be using, right? So,
Yes.
oh, I forget one. And mode multiple time frame analysis. That's where you go from the top down, from the monthly down, to identify which direction, which time frame trending in, and which time frame is just a pullback, or which time frame is a continuation, and which time frame about to reverse, right? So just using these 1, 2, 3, 4, these 4 skills that we learned so far, right? We have a look at currency there, right? So we'll go with USD JPY. We'll go with USD JPY. Just using the just using what we learned so far, right? First, we know we hop on the monthly charts, right? Because we do multiple time frame analysis. We want to know what's going on every time frame before we place a trade, right? And then we take note of the our levels on the monthly chart, right? So we could just draw out the most recent and most important support and resistance levels. If it's a quarterly figure, you just adjust the level so it's closer, so that is a quarterly number. If the level is near a quarterly number, right? So you could draw one here, you could draw one here, right? Now these levels don't have to stay on the chart. Once you know where they're at, that's good enough, right? So then we hop on down to the weekly. Oh shit. I'll adjust this so that it can show up on the week, on the other time frames. And this is what you should be doing on your own time, right? So then we hop on down to the weekly. And we know these are the monthly support and resistance levels. And now we could either adjust it to the weekly levels, right? So we know that the market is the most recent price action of the market is here. So you just that's the spot you're looking at, right? So you just know where your weekly zone is and your monthly support and resistance zones, right? So now you identify the direction of the trend, right? On the monthly chart, you can see that the monthly trend is down. And the reason why it's down is simple. It's because the market structure is pointing down. Lower lows is a downtrend, right? Even if it's just one low is a downtrend. Weekly is the same thing, right? So you know that the monthly trend is down and the weekly trend is down. Higher time frame trends are down. The daily is up, but you know that the higher time frame, the monthly and the weekly is down. So you know that the daily trend could just be a pullback, right? So you know you could look for shorts as long as the market doesn't pass this level, then shorts are available, right? The closer it gets, the better. The closer it gets to this high, the better for you. You know. So now that you know that, okay, the market is in a higher time frame downtrend. This daily time frame uptrend is temporary. So from this level within this whole zone here, all you're doing is looking, waiting, anticipating for the market to reverse, right? Because you know the market structure on the higher time frame. You know that this is just a pullback according to the rules on the higher time frame. So you would look for a reversal around where? Where's the best place? Probably near this support and resistance level, right? When the market go up here, you would probably just on the lower time frame, you'll probably just wait, right? Wait for it to break a trend line or break structure, and then when it retest the resistance or the trend line, then you go short to try to take it down, right? So you just stay aware of your zones, and now you could draw your trend line. You should probably draw a trend line on all the time frames, or just be aware, you know. And then you wait for this trend line to be broken because you know shorts coming up. So you wait for the trend line to be broken, or you wait for market structure to be broken for you to take shots, right? So if the market do something like this, come up, you can take shots here, right? Down to hell. Right here, you have two reasons to take shots: the trend line retest and resistance right here, right? So we just used all that we learned so far. We just use multiple time frame analysis, market structure, support resistance, trend line, break. We just use everything we learned so far to analyze USD JPY, right? And what I just did, could everyone confidently say that they could do this on their own? Or they could say that no, they can't because they have not been practicing and sending anything for me to review. Comment in the That's good. That's good. You can try that out. You had to try. You try, you said
I
it,
guess I can.
and you know, I'll tell you if you need to fix anything, if you need help with anything, or if you're right. The only how you're gonna know if you're doing the right thing is if you actually practice and you send me a screenshot, and then I'll tell you, you know, yeah, you're on the right track. Good. All right. Yeah. It's simple. Once you know how to identify the highs and the lows, you draw it out. You know it could be will look different on the different time frames. You just need to know okay. Support and resistance, simple. Well, you'll look over this video. I'll send you some stuff to help you practice, right?
To me, the day one time frame is the best to do the analyzing, and is that so?
Yeah, the daily time frame clean and nice.
Yeah. I even see the setup better for the Euro US.
If you decide to just pick the daily time frame and you have enough patience for it, then I'll tell you
Yeah.
treat
So
I'll tell
if
you
I
treat
do
will
the
be correct.
analyzing on the daily time frame, what time frame it would be best to enter and for like a swing trade?
If you could just trade the daily and the 4 hour time frame, then you would have a lot of you'd have a lot of good trades if you had the patience right. You know, the only thing about that them time frame is that it does take long to find trades because the market does take long to set up, you know, because each
Yeah.
candlestick is a day.
But you see that setup coming though for the Euro US
Yeah,
lands.
man. Yeah, man. You see days in advance. I'd see the Euro USD setup, but I just like I had seen for the Euro USD, I had seen this exact entry right here, right?
Yeah.
And the market was up here. But then I was thinking to myself, well, how the market go drop 60 pips and then go up? So that's why I didn't put a buy limit. But always remember the market, and this is an important lesson, right? No, nothing is too far for the market, right? The
Yeah.
market can move 200 pips in a day if it wants, you know? So you just keep in mind that no amount of pip movement is impossible for the market, you know, in a certain amount of time.
I want to master US 30 though. It on the goal.
Yeah, man. Well, that's what we're gonna do. Like you see how I have this yellow zone highlighted here? That means that's just a zone I expect in the market to reverse. So then I look for the reversal patterns, right?
Yeah.
So back to the situation at hand.
I think that will drop back to go back on the chart. Let me see something. I think it will come back on to 2660 or 264 thereabout.
That's very possible. You know, that's very possible. You just have to wait and see. Anything is possible. All right.
Um there's a support and resistance there down here.
Right here. All right, yeah. Okay, so if y'all have any, if y'all been trading a while now, or you have some experience in studying trading, then at some point in time, you would have come across the Fibonacci, right?
Yeah.
Now that is a tool that we also use simply because it tends to work. When you test it out, it tends to work, right? So, um, how I explain this? The Fibonacci tool looks something like this, right? Yeah. Oh shit. One more. Yeah. So the Fibonacci tool, it looks something like this, right? It's a set of percentages. Basically, these numbers supposed to represent. It's supposed to be how do you say this? Like, I know y'all go to school. Yeah, Fibonacci sequence, right? Yeah, it's supposed to be the numbers that just line. Like, if you had to make like the ratio or a shell or something like that, right? And I'm not even sure how you explain it, right? But basically, I think it's one's two, and I don't even know. But anyways, that's not important, right? The background of this is not important. But it's important if you want to research it on your own, right? But when it comes to trading, how we use it is very simple, right? It's a retracement tool. The tool is basically used to, it would help you identify the strength of the trend, where the pullback is likely to end, where the pullback is likely to occur, right? Based on historical data, right? So essentially, how you draw the Fibonacci ratio is you had to know what trend the market is. If the market is in an uptrend, right, then you pick the most recent low, and then you put the 100% of the most recent low, and then you drag it up to the most recent high, right? Now you do this early before the market make a higher high. So essentially the market will be coming down, and once you see it start to reverse, then you draw the level. The idea is the market tends to reverse on mainly on these two numbers, right? We call the 61.8 the golden ratio. That's like the level you want it to reverse. The typical normal trend tends to reverse on the 61.8. So when you're using the tool and you line it up and you see your support and resistance also line up with the 61.8, and you see your trend line, right? Your trend line up with the 61.8, then you know this is a high probability kill zone for the market to reverse, right? Now, a normal healthy trend, the market tend to reverse on this level, right? Now, on a aggressive trend, on a strong trend, if the market trended up quickly, then it tends to reverse on this level, right? On the 32.8, right? Usually, you would expect a slow, draggy movement down to the 61.8, and then you'll get a clean move come up, right? And when it come down to the 38.2, because it's an aggressive trend, when it hit the 38.2, you expect an aggressive bounce from it, right? Now, this number, -27 and -61.8, right? These are the numbers the trend tends to reverse. Not the trend, but that number tends to have the highs, right? So what usually happens, right? People would place their trades, and when they enter it and it bounces off the 38 or the 61, a lot of people, their profit target is usually around the -27, right? Now, because people place their trades here and they write it up to here, and when they take their profits, because it's money coming out of the market now, then the market would tend to pull back, right? And it tends most of the times 27, and then a lot of the times it's the 61.8, right? Now, usually a trend might look something like this. It might pop up to the -27. People take their profits, right? And then the market start to pull back again, right? And now when you see the market start to pull back, now you draw another Fibonacci ratio, right? You draw it from the last high, from the last lower high, and then now you're expecting it to come down to the 38 or the 61, right? And then when it makes its new high, right, you draw another one, right? Now, personally, me, a lot of people, the Fibonacci tool would look ugly, right? the two would look something like let's see, like this. Um, the two might look something like this. Let's see. Oh no. I think that's, yeah, right. It's colorful, all the level colors filled in and whatnot, right? That's not how you want your tool to look. When you're editing the tool and you're using it on trading view, you tap on it to edit it. You want to keep your trend line invisible, or you could have it at the default level if you want, right? A lot of the times you might not have this number set in, so you can add in the numbers, right? You add in the 0, you add in the to the 8.2, you add in these numbers. You put on the correct so that it can show up, and yes, you pick the colors also, right? Now I left my I highlighted my important levels. As you can see, this level is pink, this level is orange, this level is red, because I want to be able to see it quickly, right? And then a lot of times I just like remove the levels that's not so important, right? So a lot of the time my tool might look something like this, but I know this little dot come to the lower high, and then I just drag this up to the new high, right? And look at this. Look. We have a good example right here, right? High to low, and where the market reverse on the 61.8, right? Or sometimes I might just have it like this. I might just have the tool where you might just see the 61.8 on my screen, but you don't know that I actually have it lined up with the high and the low, right? So, any questions before I start practicing this and showing y'all that it actually works? Yes, no, I'll send you a picture of the Fibonacci settings. I'll drop it in the group chat. No questions? All right, well let's hop on to practicing this then. Now this is just another confluence added to us now, right? So you have about 4 so far. I think this is number 5. And you just use this along with the others to increase your probabilities, right? So, and you could use it on multiple time frames. So let's start on the monthly, right? Now, first you wanna know the market structure, right? You can see it's in a downtrend, low, high, low, right? Now, let's start with this one, right? We draw the Fibonacci here. All right, we could see that the market came up into the 61.8 level. The 61.8 level could be like this whole box right here, right? Now we already know that the market messy. the market doesn't just come and touch this exact line, right? That's why we draw stuff in zones. So we know the market came up and it reacted off the 61.8, 61.8, the golden, I usually call it just the golden zone, the golden ratio, right? Now if we draw this right here, won't you look at that? Isn't that crazy, right? Now I just picked a random pair, a random oh shit, this not even line up. My bad. Yeah. So we can see this in this example, the market hit the 38.2 because, well, the trend was a bit aggressive, right? Mm-hmm. So it pulled down, go to the low, come back to the zone and drop, right? Now remember what I said before. Usually when it hit the 38.2, when the trend aggressive, you would get a strong impulse away, right? So you can see that the market just dropped down here very quickly, right? And where did the market reverse? At the negative 27 zone, right? Because that's where people decide to take their profits, right? Slowly hop down to the back on a monthly. Make this visible on the weekly chart. You hop down to the weekly, right? Now on the weekly chart, we know we have our Fibonacci zone drawn from the high to the low, pull back, right? Drop, right? So now we could adjust the Fibonacci level, right? So we could draw it here now, right? One here and one here, right? Now usually we want the market to hit these levels, the 61 or the 32, right? However, if it doesn't hit it, then the next best option is usually the 78 level, and last but not least, the 88, right? And we have to remember, you also want to look at how the level lines up with your other confluences, right? So if we hop on we support and resistance, we can see that we have a Fibonacci level lined up with our support and resistance, right? So a good area you would expect shorts is at, okay, so if you was looking at this pair and you know the monthly down, the weekly down, the daily trend line up, but we know the daily trend line could just be a pullback on the monthly and the weekly, and we should be looking for shorts. Then we look at this chart and then we try to find an area that gives us multiple reasons why we could go short in that area, right? And the area currently on this chart so far would be around this area right here, because one, we have a resistance level, right? We have a Fibonacci level that lines up exactly with the resistance level, right? So obviously we won't just take shots right there, you know? The only how we will take shots right there is if we take the shot and we stop loss above the last high, because we know it's a downtrend, right? But if you're more conservative and you want to get a nice entry, then you know this is a daily time frame, then you know it's to drop down to the 4-hour time frame and wait for us to have a reversal pattern, right? And the reversal pattern is could simply be a breakout structure, breakout trend line. You know, once we see that this is no longer an uptrend, this is still an uptrend, right? But we're expecting the trend to reverse around this area, right? And we know once it reverses, then we have all of this, because we're expecting it to go down. Then we have all of this to find entries to try to ride it back down, right? So we will just hop on another pair and see how the Fibonacci levels working out, right? All right, so look, we have a nice, you see, euro is a nice easy pair to trade because you see how it is trend nice and fluid, right?
Yeah. I want to use it, grow my account for now till I can trade other pairs.
All right, so it didn't line up with the 61.8 here. It line up with the 61.8 here, right? Here we had a new high. So here didn't line up, but line up with the 50. Here was the 32, right? Now you never just want to use this by itself, right? The point of learning these confluences is so that you could use them with the other confluences, right? So look, you have one here, right? So I'm gonna show you an example of a trade, right? So you see that, okay, the market break structure, right? Came up and it made the high. So from the time you see the market make this high and it start retracing down, you draw out your level, right? And then you have your eyes on the 61.8 because that's where you're expecting it to turn, right? Up on the daily. 50. So that's 32. Oh shit. This one is 50. And now you can see that we could draw a level here, right? So for this last level here, we could see that the market dropped down, right? Came back up, hit the 50, the 61.8, dropped back down. I was back at it again, right? Now the reason I have this blue highlighted zone here is because I was expecting the market to reverse around somewhere within this zone. So, and you go, yeah, I'll teach you why. You know, that's another confluence. This blue highlighted zone is a confluence for later, right? No, the market did just that. So when the market approaching this blue zone, I just look for a breaker structure, and then I look for longs, right? So if I go down, let's see the other one. Okay. All right. That's a lot of the times we use the lower time frame to find where the market break structure only, right? So now we use retrend line tool here. We use retrend line tool here, right? And then we say, okay, the market break structure here.
That guy said something about double bottom.
Let me see what he said. Where is the chat? Okay. Double bottom, yeah, yeah, it is a double bottom. But for me personally, I doesn't pay attention to double bottoms. You know, it's not a confluence I use, but it's a double bottom, right? A double bottom is just simply the bottom area where the market bunks twice. Like it might look something like this, right? Right. But yeah, this is a pattern a lot of traders use. You can check it out if you want, but I doesn't pay much attention to it. Right?
Yeah.
Any questions? Any questions? So y'all think y'all could hop on the chats and draw the Fibonacci levels correctly, all right? Because that would be our homework. It's simple, right? It's simple. All you have to do is just connect the lows and the highs, right? Once you see the market make a potential high and it's retracing,
You have to practice doing that simple.
yeah. Once you see the market make a potential high and retracing, you draw a Fibonacci level, and then you're just paying attention to these numbers, right? Once the level lines up with a support and resistance level, right? Or it line up with a trend line, right? A lot of the times, this is like the trade a lot of people take, right? They wait for Fibonacci to line up with the market to line up with the 61.8 and a trend line. That's what is happening a lot of the times, right? Or it could even be like a what do you call it? It could even be a trend line break. So sometimes the market had a trend line break, and the trend line the retest line up with the Fibonacci, right? I know I enjoyed I have it correct here, so I see. So sometimes you have a downtrend, right? And the market break the trend line, and then the market tends to come back to give the trend line a kiss before it goes. A retest, and the retest sometimes line up. A lot of the times it will line up with a 61.8, right? So if you have an example like this, where the market break the structure, break the downtrend, it coming back and it retesting the trend line, right? Plus you have another trend line here. So here you have the Fibonacci, you have the trend line break retest, and then you have the third bounce of a trend line, right? And then sometimes you would have the support and resistance level also, right? So here is a good example of a high probability trade. And trust me, I've seen this many times in the market, right? You have the fib. So in the future, when you send me a chart and your trades and your setup, right? You would send me a chart and you would write the reasons why you're taking the trade, right? So you would write the Fibonacci, golden ratio, right? Trend line, break, retest, right? Sometimes you would write the time frame too, 4 hour trend line break retest. And you write trend line would touch. Or you could just write trend line bounce. And then you could write support level, right? And then you could write uptrend, right? So here you see I have 1, 2, 3, 4, 5. 5 reasons to take a long trade in this area, right? And you would see, trust me, you would see this on the chart. You would see the market line up like this, right? Yes, your take profit would be the negative 27 or the 61.8, right? And you would find a trade like this, and you would write out the reasons why you're taking this trade, and then you drop it in the chart, and then I'll be like, all right, good job, you're learning, you know. But yeah, this is about 1, 2, 3, 4, 5 confluences, and this is a simple way how you would approach the market, you know. Once you practice these confluences, you know them like the back of your hand. You can identify them in the market. You know, like you want to be on a level where you can just look at the chart and you see all of this without even drawing it, and you just pick out your level, right?
Yeah.
Like a lot of the times, I could just look on the chart and I could, because I already kind of have, because I draw the Fibonacci so much times. Sometimes I don't even have to draw it to know that the level line up with the 61.8, right? Because you know the 61 is like right behind the 50, so the 50 is like half. The 50 is half, right? So you know the length of this impulse, right? You know where half is because you can obviously measure. And then if you practice enough, you would know where the 61 is before you even draw it. But yeah, so yeah, I just use it because it's a good confluence because it works, you know. It's just an extra reason to enter the trade, you know, so you have more confidence. Because if you backtest this, you would see that it works if you Google it. And the reason why they have this is because it works, you know. The Fibonacci ratio is fractal, just like the price. So when we had showed the shell, like this swirl is basically the Fibonacci ratio, and this could go forever, right? It's just like a perfect swirl down and down and down. It could go forever, right? The same with this. And just like the candles, all of this is the Fibonacci ratio, right? And just like the Just like the Fibonacci ratio you could zoom into it forever. It's just like the candlesticks. Just like how you could break down the monthly, down to the weekly, down to the daily, down to the 4 hour, down to the 1 hour, down to the 1 second candles. I'm sure you could go down to the milliseconds and you know, golden ratio. But yeah, the Fibonacci ratio is like a universal. It's like a universal law. Let's see. Let's see what it mark here, right? Fibonacci. 1, 2, 3. Y'all can see my screen. Like what y'all see right now? What you seeing right now?
Golden ratio.
Yeah, well, I see golden ratio. Yeah, search on Google.
Okay. I'm gonna Google it. Free to show you. I'm gonna Google it. Yeah, Fibonacci sequence of numbers is as follow. 1, blah, blah, blah. The key Fibonacci ratio is 61. 8. I guess this is just how traders use it or whatever. But you could do your own research, you know. It's always good to do your own research. Because you never know. I could be teaching you a whole pile of shit and you don't even know. So you do your own research to actually see that, yes, this works, you know?
Yeah.
And you can practice it and you might just stumble upon something that might help you out. But yeah, you go. Any questions? So y'all confident y'all could draw this? You go on a monthly chat and
I
draw
would have to
this.
practice. It would be easier for me with the computer.
I mean, yeah, but just edit it on your just edit the tool on your phone. You know, you have to be able to work with your phone. So go on your phone and clean up your chat. Have the right chat settings. And I used to have a piece of shit Samsung and still be able to use the tools. You know, that piece of the phone probably smaller than the palm of my hand. You know, you have to be able to work with what you have, and then you'll get what you want. But yeah, probably a good day. Just drop something in the chat and we'll call it a day. Okay, Narun. So when you go in an MT4 on the computer and you adjust your chat colors or whatever, you right click and then you click save theme because you had to save the theme, right? You had to save the settings, right? You give it a name, and then when you open up a chat, you just right click and you click load theme, and then you click the name, the one you had edit, and then it would load up the settings that you had. Any other questions? You know what's crazy? I guess that people Israel missed this class. I guess people like recorded videos. You know.
I will have to send in that tomorrow because I'm a bit sleepy right now.
All right. We'll chat later.